Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 29th of July, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the first week of August. Let's begin with a quick look at both these inversely correlated pairs, with the spot gold attempting to climb up, but after spiking through resistance, it tumbled back down again, but recovered at the end of the week. And that drop on Thursday was due largely to the US dollar recovery against the euro, where the ECB announced their rate hike. But euro had a bearish fall, and the US dollar all took advantage. And whereas for the dollar against Japanese yen, it continued to turn bearish from the start of the week and until Thursday, where it had a volatile US afternoon session, where the Japanese yen just strengthened against the US dollar, and it just tumbled down and continued into Friday morning with the Asian Friday morning with the BOJ announcing their policy decisions, and with further weakness until it almost hit the key support at 138, where it finally managed to bounce back up and then recovered throughout the day as well, until it almost hit the high that it fell from the previous day. So definitely a very volatile week last week, with the BOJ, the ECB, and also the Federal Reserve announcing their rate decisions, with the BOJ announcing their yield curve tweaks. So let's take a look at last week's major news drivers, and look forward to this week's key news, with the couple more central banks reporting, with the RBA and the Bank of England. So last week it was all about the two major central banks, the FOMC and ECB, announcing their rate decision, where they did both increase by 25 basis points. And after their announcements, both the dollar dipped lower and the euro did a significant bearish retracement. And Australian CPI came out slightly lower than expected as well, which is could influence the RBA's decision next week, but they are expected to also increase rate by another 25 basis points. And the major uncertainty for the week was at the end of the week, with the BOJ adjusting their yield curves, and that caused a lot of whipsaw, and it actually strengthened the Japanese yen initially. But by the end of the week, on Friday, we'll see charts where it managed to recover back, and yen continued to weaken. So this coming week will be the RBA's and BOE's turn, with their expectation to raise interest rate a further 25 basis points, and as well as the Bank of England, another 25 basis points as well. Now, the ECB did mention that they have not decided on when the next rate increase is going to be. So in September, it could be a pause, or there could be an increase, so we'll see. But similarly with the Federal Reserve, they also mentioned that from now on, they're switching to data dependency. So we'll see how the data will appear for the next couple of months until their next meeting, and whether they will pause and whether they'll have concerns still on inflation. And just to close the week, on Friday, the PCE price index did come in exactly as forecasted, but this was a lower level already. So, but after that, the US dollar managed to recover from the weakened effects from the Federal Reserve, and also recovered from the weaker euro, took advantage of that, and managed to recover back up, as we'll see in the charts later on. So it's definitely was a very volatile week. This coming week, some minor news with the Eurozone CPI estimate, and also the US ISM manufacturing and services PMIs, and but the major one is going to be, apart from the RBA and BOE, the non-farm payroll report from the US. Forecast is at 200,000 jobs to be added versus actual of 209,000 the previous month. So it's still hovering around the 200,000 estimate. So this is going to be interesting next week, because we've got one more day for the end of the month, and we'll see what the impact is for that month, leading up to into August, with a couple of rate decisions and jobs numbers. All right, so it's still going to be another fairly volatile week, and to close with a significant news event as well. Okay, so let's move back to the analysis. Let's start with spot gold, and it attempted to recover the first half of the week towards the 1975 resistance zone. And it almost was approaching the next key resistance areas, but fell short and was not able to continue higher, and was rejected. Strong rejection there, and tumble down along with the euro and the cable and all the major pairs against the US dollar. So that's where the US dollar recovered on the Thursday. And fell into the support level, just spiked through the support zone of the 1950 and the daily 55 EMA, but on Friday managed to recover back up, with the US PC price index, which was as expected at 0.2%. Let's check the weekly time frame, and it closed as a doji after the previous week's spin top, and also within the range, slightly dipped lower than the previous week's low. So this seems to be drifting a bit lower. And it seems to be consolidating within this descending wedge. So there is the next area of support just below that trend line, and at the 21 pip retracement. Next major support is going to be at the rising 200 and above the 1900 round figure. Well, it could be further consolidation next week within this range. It's unlikely that it's able to break through the 1975. But if it does dip below the 1950, there's still further support from the trend line and the support zone below that. So it could still be consolidating for next week. And let's check the monthly time frame as well with one more day to go. And yes, it's still a bearish, still a bullish candle so far. And let's see how it closes on the Monday. But this range is still a very good range at 400 pips. Okay, so let's compare this with the US dollar index and see whether the inverse is true for the DXY. And here's the US dollar index. It did initially attempt to climb up and hit the interim resistance zone at the 101 until Tuesday and then Wednesday, where the FOMC announced their rate decision. It tumbled back down into support area at the 138 pip extension. But with the help of the ECB, where the euro just fell hard on the Thursday, that helped push the US dollar back up, and a strong bounce back across the 101 and into the resistance zone at this swing low. So it's the 101.50 area. And then pause as a doji on the Friday after hitting the daily 55 EMA. So now stuck between the 101 and the 55 EMA here. And if we take a look at the weekly time frame, it's still a bearish close. There could be further momentum upwards, could be limited by the previous bearish weekly candle. On the monthly time frame, it's still attempting to recover, and with a long lower wick now. See how much more it can recover just with one more day left for the month. So resistance is still at this swing low with an interim support now at the 101. and another support right at the 138 with extension with this previous swing low. And a major support is going to be at the round figure of 100. Okay, so it has this range to contend with, and immediate one is at the 101 support. So there could be just consolidation for the last day of the month, and may not be able to break out higher. And it could be support as well about hitting this level again. All right, so we'll see how this closes on Monday, and we'll have to check the monthly time frame. But the key news this week will be from the US with the non-farm payroll report, the jobs report, and to see how that's going to impact and influence the Federal Reserve for more data for their next meeting in September. Okay, let's move back to the other pairs. Let's move on to the dollar against Japanese yen, where it had some volatile swings last couple of days on Thursday and Friday, where it started off retracing lower as the US dollar was still retracing lower after hitting the 142 resistance zone. And then on the Thursday, it did manage to attempt to climb up higher as the euro and cable and the rest of majors were falling hard against the US dollar. So it did attempt to recover. However, at the start of the afternoon session in the US, it just fell hard, and Japanese yen strengthened. It seemed like some kind of intervention or some rumor that was sparked before the Friday's Bank of Japan's policy meeting and decision. So that brought it back down after hitting, was not able to climb up higher. That brought it back down and followed through on the Friday morning, Asian morning, for the BOJ's decision, and they did announce some possible tweaks to the yield control curve and added more bond purchase. But after that, from the US session onwards, it managed to recover back up as the PCE price index stayed flat as expected. So that gave hope for the US dollar again, and that allowed the US dollar to recover against the Japanese yen, which recovered back up to where it fell from. Let's take a look on the 4-hour time frame to see where that started to happen. And let's go into the 1 hour. And right at the start of US at 1 p.m., that just went down 200 pips, almost 200 pips, back down to support the pivot. And then a volatile new session with the BOJ where it just whipsawed back up into where it started from and fell back further below the lows and until it managed to recover back during the US session again. And now it has recovered back up from where it started, where it almost closed on the Thursday. So very volatile indeed. And this swing here for the Bank of Japan news was about 250 pips. And if we go take a look at the weekly time frame, you see this long lower wick here. So there could be some further bullish momentum pushing back up. Let's also check the monthly time frame. And with one more day, we'll see how much more it's able to recover. So this week, it's also exposed to the US news with Friday's non-farm payroll report. But so this 140 is still going to be an interim support zone. And there's already a support zone just below the 138 where it did manage to bounce from. So of course the critical support is at this 50 fib. Interim resistance at the 142 and a major resistance at the 144 up here. So within the 138 and 142, it could just consolidate for next week and may not be able to break out or break down any much more around this massive zone of 400 pips. So it could just settle above the 140, maybe perhaps around the 141 level. So with these whipsaws and possible changes announced by the BOJ, we'll be cautious with these possible interventions by the Bank of Japan. They have intervened before, so watch out for some of the key resistance zones where they could intervene if the Japanese yen gets too weak. So that's a key support trend line here. Let's see how much further it's able to climb up. And 142 now will be the clear target that the yen is going to shoot for. Okay, so do check out my other videos with the other major pairs and have a safe week and a good trading week. And cheers for now.